Good afternoon, everyone. I'd like to welcome you all to the Halftime Talk feature interview series. I'm delighted today to be joined by Sarah Emerson, founder and president of ESAI Energy, to talk about all things oil market. So, Sarah, thanks so much for joining us.
It's a pleasure to be here. Thanks for inviting me.
Great to have you. Great to have you. Okay, well, let's start by talking about sort of what's making too many headlines, of course, making headline news these days. But in the context of the, trade headlines, trade tariff headlines from America, from the US, and their impact on the sort of global economic sentiment, rather than getting into specifics of countries. But what is that doing in the immediate sense, do you think, and the immediate outlook, if you like, in the short term, for volatility on oil markets? Are they responding, or should it all remain the same in terms of oil price and that volatility scale, if you like?
Well, I think these are such big announcements that you have sort of concentric circles of response. And for those that are very far from the oil business, I think it's they connect the dot between more tariffs, protectionism, and lower economic growth. For the folks that are a little closer to the oil business, like us, you see that some of these are threats or perhaps negotiating positions. And so things have actually moved much slower than I think President Trump's rhetoric would indicate. So I think that's part of it. We have two different perceptions of what's happening here. And I think, we've seen, we virtually know the tariff implementation has been quite slow relative to the announcements of the president. So that's, I think, why there's a little bit of mixed reaction, depending on where you sit in terms of your understanding of the oil markets.
Absolutely. I mean, okay, well, let's take that a step further than that question and have a sort of scenario where we might actually see some of these announcements start to play out, just as a sort of economic assumption. I mean, a big one for the US, obviously, is what, I mean, from a bilateral point of view with Canada,
Yes.
etc. If that actually happens, and also then Canada reorganizes, let's say, its exports accordingly, gas is a big one for the US in terms of Canada, obviously, but we could see a lot of dynamics there play out. I mean, can you give me a scenario that we could see and that would impact, again, global oil markets?
I actually feel like the Canadian tariffs are not going to have that big an impact on the global market. It's unclear even how much impact they will have in the United States. So if you take just the oil, crude oil and refined products, that's a 10% tariff on prices that are actually fairly low right at the moment. So their direct impact on consumption in the US may be a little bit muted. We're talking about take gasoline into the Northeast. I mean, we're talking about the wholesale RBOB price is 210. That's a 21-cent tariff, which would bring the prices up, closer to 230, but that's still historically low. So in some cases, I don't think that's going to have any big impact. Natural gas into the Northeast, however, that is the only source of natural gas, comes from Canada. And that could be, and natural gas prices are quite high. So that's a concern. But again, that's probably not a global market impact. Electricity into sort of into the western half of the country. I mean, it's a smallish number. It's not easy to replace. So I think that Canada tariffs are going to have a very localized impact as opposed to a global impact.
Okay. Well, what will probably impact oil prices more, is on the fundamentals and sort of market balances, if you like, is obviously Gulf OPEC producers, OPEC Plus, of course, planning to sort of start to incrementally add volumes to what many are describing at the moment as a sort of bearish oil market. We've seen, prices sort of hover around the $70 mark, give or take, whether you're talking about TI or Brent, getting a bit of recovery in the last few days because of sort of knee-jerk geopolitical reactions, maybe. But do you think that the decision finally for OPEC Plus to kind of proceed with adding these incremental volumes next month is the right one? Do you think it's wise for the producers themselves, for their own interests, and what impact do you think it could have on the market in the next quarter, let's say?
Well, I think, excuse me, I think there are a couple of different ways of looking at this. I think the IEA in particular has put a narrative out there that the market is very oversupplied. And I'm not sure that's entirely what's going to unfold because we do have, tightening sanctions on Russia, which could marginally reduce exports. We have suspended licenses for Venezuelan production. That's going to reduce exports. And we have, as Mr. Trump calls it, his maximum pressure campaign on Iran.
Mm.
So there is more of a sort of supply decline than maybe the IEA's narrative suggests. But again, they're presenting what we already know as fact, as opposed to what we expect to be coming down the road. So I actually understand the OPEC decision in light of three countries that are going to be constrained, and also in light of a range of opinion on oil demand growth. The IEA, I think, is around 1.1, but there are some estimates out there, including OPEC's, which is closer to 1.4. So if you take OPEC's demand forecast and you take this constraint on a number of countries, and then it's a question of where you put Brazil. Brazil had a slowdown last year in its expansion, and some folks just sort of say, oh, well, that all comes back really quickly this year. And it's not entirely clear that that will happen as fast as some believe. So the market may not be quite as oversupplied as that sort of narrative that the IEA has. And so go ahead, sorry.
Yeah, no, absolutely. I mean, so many sort of variables there, obviously, on both sides of the equation.
Right.
And obviously the supply, you mentioned Brazil, of course, that did disappoint last year. You've got this, even US production, which, at these prices is still going. But again, a lot of talk that that's not really going to increase much more. I mean, you mentioned sanctions from the maximum pressure point of view, on Iran, especially, a lot of people we talk to are a bit cynical that we will see a significant reduction in Iranian oil exports. I mean, they have already reduced from last year, admittedly, but that quite a few people are confident that we'll still see that sort of 1.2 million barrels a day flow because Trump actually doesn't want to stop those flows. He wants to just use them, obviously, as a bargaining chip to get around the table. I mean, what is the current sentiment, do you think, from your point of view on that? Do you think it is just a way of maximizing pressure on Iran to sort of give up its nuclear program, for example, rather than cut its oil exports?
Well, I actually think, the conspiracy theorists say, part of the reason he wanted to end the war in Ukraine was to increase the Russian exports and decrease the Iranian exports and perhaps get China to take more Russian oil and less Iranian oil. That's sort of this conspiracy idea out there. I'm not sure that really holds a lot of
But I
water.
mean, well, on that point, Russian exports haven't really been decreased, have they? I mean,
No,
they've
they
gone
haven't.
around a different way, but they're as they were, as are their revenues, supposedly.
Well, and I think that's the idea behind the conspiracy is that Russia will go up and Iran will go down. My own feeling, and I've spent a lot of time looking at what can you do with Iran, and I do think you can reduce exports through maximum pressure. Can you cut it by 1 million barrels a day, or some of the suggestions of the administration? Probably not, but you might be getting down 500,000-600,000 barrels a day just through tighter enforcement of shipping and tighter enforcement of perhaps banking and leverage on China. To the degree that that happens with the trade war. So I do think the Iranian number will come down. The Russia is a much wilder card in my opinion. I think President Trump sort of surprised everyone by saying, "Oh, we're meeting." U.S. and Russia are meeting to end the war.
Yes.
We're meeting again today to end, to sort of try to get to a ceasefire. I think that's going to be a little bit more of a drawn out process. I think both sides have their heels dug in. But I think that was the idea, is that, the war would end and Russian exports would rise a little bit. So, I don't really think any of us know exactly what's going to happen, but I don't want to discount the possibility that the Iranian exports could still come down some more.
Okay. And you mentioned demand in terms of the forecast of the IEA and OPEC, of course. That OPEC sort of got it wrong a bit last year, didn't they? They were much more bullish on demand, primarily because of their China, pinning that on China. We saw what happened in the end, that demand did come down, did come out weaker, and everybody kept adjusting those forecasts as 2024 went along. Now, this year, again, do you think that we're going to get, I mean, we've seen a couple of OPEC reports already, but will we probably get a more realistic, more conservative forecast? And what are your views on what we could see from China this year, economically speaking, and how that might impact its imports?
Well, to be fair, IEA was a little bit wrong as well. IEA numbers came up, OPEC numbers came down significantly. So, now I think that the band of uncertainty is a lot narrower, whether it's 1 million or 1.4, most forecasts are in that range. So we're all a lot closer to each other than we were last year. Our own numbers are closer to 1.2. And, there's a lot of different factors to take into account this year that maybe weren't there last year. For example, lower oil prices. That's going to have an impact. The possibility of, well, actually OPEC bringing more production back will also encourage lower oil prices. There is some sort of bad macroeconomic news if you believe the protectionism slows economic growth, which I do believe. But at the same time, you're seeing Germany entering into a fiscal policy that will encourage spending on more manufacturing and industrial growth. So Germany may have a little bit of a renaissance here. There's possibility of recession in the United States, although, there's a lot of debate over that. And so I think there's so many different factors, whereas last year, I think it was easy, more of a head scratcher. Why are you at 2.2 million in growth when there's so many things that are indicating lower demand? This year, I think it's much more of a combination of factors that may surprise. I mean, more marine gas oil because of the ECA in the Mediterranean. I mean, there's just a lot of items that may actually lift demand a little bit.
And what
More.
does it tell? Yeah, absolutely. And as you said, there's the cost of production as well. It's impacted obviously by the oil price that all the producers are getting. What does that tell you? I mean, what's the sentiment these days about sort of more medium, long-term capex, investment? Obviously, OPEC's one of the things that OPEC keeps saying is we want to balance prices. We want to keep prices healthy for the sake of, continuous investment in long-term, obviously, oil supply for the sake of everybody, in the developing world. I mean, how has the lower price range that we've seen in recent months impacted, do you think, sort of future investment sentiment from what you're hearing?
So although the price is lower, I don't think it's low enough that it's really had a huge impact on investment, even in the US. I think we're still going to see, higher production in the United States, certainly in Canada and Brazil and Guyana. So I actually don't think in 2025 this is going to be a big issue. In 2026, I'm not even concerned then. The question is, if you have $60 crude for, a couple of years, yeah, on the margin of the market, some of the more high cost production might slow down. So, I mean, we could see a slowdown. We're not so much in the camp of says, okay, there's not enough investment at this point, because we also see a more moderate demand growth as well.
Okay, I mean, yeah, I suppose that is the outlook. What about again, we just had Sarah Week in Houston, a lot of people giving their comments out of that, their takeaways, and the biggest takeaway apparently was that, green energy transition is, has finally taken a big knock on the head. It's still there. Obviously, there's still billions of dollars being put into it across the world, but that, energy security, oil and gas is back in full throttle, and many, independent private companies such as BP and Shell, recently sort of retracting from energy transition commitments. I mean, do you think, something here to stay? Is it just a result of the Russia-Ukraine energy security war, what we're seeing in the Middle East? What's the 5-year outlook, do you think, for that?
Well, energy security never went away. It's always there. And I think most countries have some form of energy security policy, even if it's not stated, it's sort of in their planning. Um, in terms of the energy transition, I think maybe it's taking a breather in terms of how it's reported. As you know, there are many different kinds of stakeholders in the energy transition. There's the press and politicians, and there's scientists, and there's investors, and I don't think all of those groups have spoken with a single voice at all to this point. And so right now it's headline grabbing to sort of say, oh, electric vehicle sales are down. But the energy transition is well in place. It's just going to take time, but we always thought it was going to take longer than 2050. So maybe there's a little bit more sober realization of that now.
And what about China? I mean, you mentioned electric vehicles. Those sales are not down, are they, in
No.
China? And neither are the sales of its electrical vehicle exports. I live here in Dubai, and all I see now is Chinese hybrid and EVs. Very economical, much cheaper than the European or US makes. Is that making, do you think, a little bit of a dent in China's oil demand, really, or is it just running in parallel?
Oh no, absolutely making a dent. Basically, in the case of gasoline, I mean, gasoline demand has peaked. Diesel demand is probably peaked, close.
Mhm. Mhm.
Um, and so, transport fuels in China just don't have the growth that they had 10 years ago. I mean, there's still jet fuel. I think that will still grow. And obviously, there's demand for manufacturing and some long haul shipping. But no, it's really had a big impact on China. And it's having some impact in Europe, although perhaps not as much as we thought it would at the pace. And of course, now in the US, EV sales have really dropped in terms of as a percentage, I should say.
And how much are Trump's sort of policies, again, trying to get rid of a lot of the elements of the IRA bill, and obviously the drill baby drill mantra that maybe companies aren't necessarily responding to yet, but how is that impacting also, I suppose, his policies and what he proposes he wants to get through Congress, sort of going to impact the balance again of sort of new energy versus conventionals in America?
America's move towards the energy transition has always been a function of permitting. So, and it's been difficult to permit. We had Mr. Trump 4 years ago, and then we had Mr. Biden, and really the ability to permit under both of those was fairly limited. And so you have to go back to even if the states can get permitting done, it's hard to get the federal permitting done. So now we have maybe another 4-year hiatus on some of the permitting for new energy. But I think the investors and the capital is there once it gets easier to make these investments. And I have a lot of interest in offshore wind, and I know when Mr. Trump was first elected, that basically put an end to permitting offshore in the Northeast and the East Coast. And we kind of have gone through the same thing again. The IRA, in my opinion, is a great piece of legislation, but it was never grand. I think it was well reported by sympathetic reporters, but I think actually when it was charging, it was hydrogen, it was not really a mountain moving kind of piece of legislation. I mean, the RFS under the Clean Air Act amendments has done more. So I think,
Interesting.
and then drill baby drill, it's almost like he woke up from a dream or something. That's a phrase from way back when. And I think, producers are doing what they can do, and I don't see a big change in the drilling
Yeah.
profile.
But they're doing what they want to do, aren't they? And they're keeping their shareholders happy as well, which has been the policy for a long time, regardless of our oil price, it seems. What
Yeah.
about Europe, Sarah, in terms of its sort of energy transition, but also, for example, bringing into context there sort of the refining industry as well, which has been obviously on the decline because of competition. Obviously, you've got much more competitive, newer refineries in Asia and the Middle East, where I sit, and economically, again, budgets, not necessarily being put towards that. But do you see that that is a dying breed, really, refining in Europe, that they're transitioning more proactively to greener sort of energy and imports, I suppose, and less sort of independence on the refining front?
Oh, that's a really thorny question. That's a difficult one to answer. I think we have to sort of look at Europe and consider it from a political point of view. And are seeing a somewhat rightward tilt in some of the governments in Europe, which may marginally slow down the energy transition. I think, especially in Germany, if we do see an increase in manufacturing or industrial use of energy in order to sort of build out infrastructure or even build out a defense industry, that's probably going to use fossil fuels to some degree or to mostly. So I actually think Europe may not be quite in the decline in terms of petroleum demand that maybe we were talking about a couple of years ago. So I'm not, I mean, I know we've done some analysis of what refineries are most at risk, but I don't really believe that's an issue for the next year or two, maybe beyond that.
Okay, and I mean, if again going back to demand and Asia, really, if China is what it is, obviously its GDP growth is being adjusted and being finally accepted by the industry and believed. I mean, are there any other growth areas in Southeast Asia, East Asia, India being one of them, obviously, that can in any way replace that sort of gasoline demand decline that we're seeing in China and diesel? How are producers and oil sellers meant to look at that going forward in their planning? I mean, are there alternative markets that can pick up the slack?
Well, I mean, we haven't talked about petrochemical feedstocks, and that's what we're seeing. That's where a lot of the growth is coming from. So you still have transportation fuel growth in the United States and some other parts of the world, but when you start looking at Asia, you're really talking about petrochemical feedstocks,
Mm.
and across Southeast Asia, and it's still in Korea and Japan and China. So that's kind of what's carrying the fossil fuel, or I shouldn't say fossil, the petroleum demand at the moment when you start looking east of Suez. And so I think that is a fairly robust growth and should be for several more years.
Okay. And I mean, just finally, Sarah, just as we wrap up, it's a bigger sort of picture question, but back sort of to the oil price, to sort of oil market balances, how that impacts prices where they are today, what we're expecting in terms of new supply in the coming year or two versus demand. But one thing that has not really impacted prices in the last couple of years is geopolitical risk. We used to see oil prices shoot up and shoot down, and afterwards, when the market would sense that there's risk around. There's certainly no shortage of what should be perceived as geopolitical risk in the region here, for example, in terms of the sort of critical choke points where oil passes through. And yet the market has been very relaxed about any actual supply disruption. Of course, we don't know what's going to happen, but the feeling has been that even if we were to see, and we've seen a lot of obviously rerouting of cargoes, that there's plenty of supply out there fundamentally. So even if we see things ratcheting it up with Iran and in the region here, that we're not going to see a spike in prices.
Yeah, and I think that there are two items there really to consider. One is OPEC spare capacity, which most people believe is above 5 million barrels a day. So that you can tap into
Yeah.
that if it's a disruption somewhere. I think the other item, and I think this is not talked about as much, is the pandemic taught us something about oil demand. It basically said, if you want to crimp oil demand growth or oil demand use, you can
Yeah.
actually, you can basically force people into remote working. You can do things that would reduce transportation use. Um, We also have tremendous natural gas growth, which is penetrating transportation fuels, thinking about the LNG trucks in China, for example.
Yeah.
So I think there is a feeling that we have a little bit more resilience against geopolitical uncertainty. Of course, I mean, that can change depending on the kind of geopolitical event.
Okay. And Sarah, one last question. I mean, on the back to the OPEC plus strategy, as you just said, they've got 5 million barrels a day plus more or less of spare capacity that they've taken off the market, planning to reintroduce a bit of that next month. And they've been very much sort of not congratulated, but given the sort of thanks by other producers, perhaps, that they've managed to keep the price where it is,
Mhm.
and have not sort of taken a market share strategy outlook as has happened in the past. There are whispers that their patience is running out, particularly the larger members who have taken most of the cuts, and that with Russia really not being part of the group, really, because it's the only reason it's held back production is because of practical reasons, not because it's towing the line and other non-compliance issues, that we are getting to the stage as the price drops as well, where countries like Saudi Arabia and the UAE, uh, particularly the UAE, which has more capacity to export, are going to run out of patience, and just it's going to be every man for himself. Do you think we could see a scenario where we'd see the OPEC plus group unravel?
Wow, that's a big question.
I mean, practically speaking, is there a reason for it to do so?
Well, there's unravel and then there's unravel, right? So it could unravel in terms of its ability to operate together. On the other hand, it could still exist. So a lot of this is sort of perception anyway. I mean, to have these 22 countries working together, obviously some of them are lifting the weight, the heavy weight, and some of them are lifting very lightweight to stay together.
Mm,
So unravel, I think there's a deeper question inside that you started with, which was, would some of the Arab Gulf countries decide that they were tired of holding oil off the market?
yeah,
I don't think we're there yet. Although, everyone looks back to 2014 and says, well, it could happen. But I don't think the US growth is fast enough. I don't think anyone's fast enough except perhaps Brazil. So that isn't quite as big a threat on market share. So I actually think the Arab Gulf core, I suspect will stay the course. And the others, it's they want to be at the table. So they'll do
yeah.
enough to stay at the table. I mean, look at Kazakhstan. They're at the table, but they've produced way overproduced.
Yeah, but I suppose if oil prices continue to be bearish, then the more that is the case, the more advantage I suppose that OPEC 8 or core, will have in terms of cost of production, and I suppose power to wield whatever decisions they want to make. Sarah Emerson, founder and president of ESAI Energy, thanks so much for joining us this week on Halftime Talk. It's been great to have your views.
You're very welcome, and it's been great to be here. Thank you.